Hey everyone, welcome back to my channel. I am Yolanda Hayes and I am a local realtor in the Winston-Salem, North Carolina area. I want to go ahead and jump into this video really quickly, but before I do, please make sure you go ahead and like, comment, subscribe, and please make sure you are on my social media. I will go ahead and leave all of my contact information below for Instagram, TikTok, as well as Twitter. Today's video is going to simply piggyback off of my very last video. So if you have not watched that video, and it is in regards to the buyer's timeline, please make sure you go ahead and go back to that video and watch that video first, because again, this is going to be information that's going to piggyback off of that very last video, and I will go ahead and leave the link up in the cards as well down below. So we're going to go ahead and jump right in, since this is again a piggyback right off of the last video. The buyer's timeline. I discussed in that video that when you are ready to buy a home, you want to go ahead and make sure you're doing everything up front that you need to do, and I listed that in that video. But the before part of it is the timeline. You want to make sure that you give yourself at least, at minimum, 60 days from the time that you contact a realtor. With those 60 days, 30 to 45 of those days is going to be when you go under contract. So this video is to simply piggyback off of that, just to let you guys know what is going on during the what we call due diligence period. Because right after you go under contract, you go immediately into the due diligence period, and that is when the ball gets rolling with your loan. So there's a grace period that we call due diligence period here in North Carolina. That due diligence period is your out. That is kind of like, you know, your way out of a contract. And once you're under contract, if you decide that you no longer want to purchase this home, or you just no longer want to purchase a home at all, you do have that as an option now. This has not always been the case here in North Carolina. This came about, I want to say it probably was about 9 or 10 years ago. The due diligence period was added in to protect buyers so that they can get out of the contract if something was to arise. So what happens during the due diligence period, and I do have notes here in front of me if you see me looking down. So as soon as you go under contract, day one, that is when your due diligence period starts. So I do want to talk about the due diligence period, although I do have several videos here on my channel about the due diligence period, and I will leave some of them up in the cards. I'm just going to briefly go over what that is. The due diligence period is a time frame that is discussed and negotiated between you and the seller. This is before you go under contract. This is one of the terms of the contract agreement. You may present to the seller, you know, hey seller, I need 21 days, 3 weeks to do all my homework on this house. I want to get my home inspection. I want to do this. I want to do that. I need 21 days. So with the 21 days, the seller could say, okay, I will give you 21 days, or the seller could come back and counteroffer and say, no, I'm only willing to give you 15 days, or I'm only willing to give you 20 days to do all your homework and research on the house. That is the period of time that you have to get out of that contract, okay? So what you want to do in that moment is you have to pay money. That's number one. It is not free for a seller to take their house off the market. So hear me. The due diligence period comes with money. It's kind of like you're renting the house for 21 days. The seller cannot allow any other future buyers or potential buyers see the property while you have a contract on this house. So the seller is actually taking a risk. The seller is taking a risk by taking their home off the market for you, and then you may or may not back out. So to cover them, you have to pay them. That check or money order goes directly to the seller. So you would say, Mr. or Mrs. Seller, for 21 days, I'm willing to pay you $1,000, or I'm willing to pay you $2,000 to hold this house for me. If you were to back out of the contract, the amount of money that you put in with the seller as a deposit or to hold it, you lose, okay? So you do lose that amount. You may look at it as, you know, at least I'm out of the contract, but I am losing $2,000. But guess what? You're not stuck with a house that you don't want. So just keep that in mind, that you do have to put money up front to hold the house and basically to satisfy the seller if you were to back out. So immediately once we go under contract, your loan officer will begin their work as far as preparing your loan. They're going to start asking you for bank statements, pay stubs, your HR contact, because they have to verify your employment. They're going to ask for tax documents. Please, please, please make sure that you have done your taxes for the last 2 years, okay? We've had several people that have not done their taxes. So if you are in this tax year, so for example, we're in 2023, you have to go ahead and file your taxes for 2022. If you owe money, that is considered a debt and you need to pay that first. So please keep that in mind. When they are asking for your tax documents, you have had to have that current year that we're in, you must have already filed and paid, if you owe, your taxes. Also during this time, you will want to go ahead and get a home inspection. Home inspections are not required, but they are definitely highly recommended, because you want to make sure whatever house that you are buying, that it is something that you, if it's an older home, you definitely want to go ahead and get a home inspection, because how often do you know, how many people do you know really upkeep their home? How many people are really servicing their HVAC system on an annual basis? How many people are having their roof checked to make sure? We want to know the age of the roof. How old is the roof? How many more years do we have on the roof? So it doesn't matter if it's just a home inspector. You can actually hire specialists during this period as well. So say for instance you hired a home inspector. They're going to inspect the house, but they're not going up on the roof and walking across the roof to see if any shingles are missing. They are only going to look at the roof from a distance. They are only going to possibly get on a ladder or possibly not get on a ladder, but they may stand out in the middle of the street and take pictures from there. They are a home inspector. They're not a roofing inspector. So if you want to hire a roofing inspector, if you want to hire an individual plumber, an individual electrician, anything like that, during that time is your time. This is your due diligence period. So during those 21 days, you can do any homework on this house that you want to do. And this is your time to do those things. So the actual home inspection is for your knowledge. So if you want, like I said, a plumber to come in and the plumber look at the hot water heater and look at the date and see how old the hot water heater is, that is what you can do. So no one is stopping you. These are the things that you can get done. Now, as I mentioned in several of my videos, we are in a state, North Carolina is a buyer beware state. North Carolina sells homes as is in their current condition. So the sellers will not have to make any repair. It is no legal requirement for sellers to make repairs in the state of North Carolina. I know that is shocking because that is not the same in other states, but you're buying in North Carolina and this is the law. The seller at that point can say no if you ask, but you do have the right to ask them to make repairs. But the actual report that you're going to get from the home inspection is for your knowledge. It is for the home buyer's knowledge. If you choose to move forward with this house and there's nothing on that list that is going to cause you to walk away from this home, you can keep the home inspection report as a reference guide for you throughout the years. Just go down the list and just start checking things off the list. Okay, this is broken. Okay, I know I need to fix that. Okay, every year just go through the list. If there's things that immediately need assistance as soon as you move in, then you know that up front. So if there's something on there that you're like, you know what, this is gonna cost about $10,000. I don't have $10,000. The seller is saying that they're not gonna repair it. I wanna walk away from this house because I don't have $10,000. That's something that you have a choice. You do have a choice to walk away during that period of time. Again, you will lose whatever money that you have spent. So if you already had the home inspection, you don't get that back. You've already paid the due diligence money, you don't get that back. But you're not stuck with a home that you don't want. Also during this time, your bank is going to behind the scenes gonna go ahead and schedule for a licensed appraiser to go out to the home to verify the value of the home. This is not anything that you have to be a part of. The actual bank is gonna schedule and contact their own third-party company that's going to go out to the home and basically evaluate and give their professional opinion on the value. When this happens, sometimes sellers unfortunately will get upset if the value or the price that they have listed or what you've offered on the contract. So I want to explain this. What you offered on the contract, that may not be the true value of the home. Just because the seller listed the home for $400,000 and you offered $400,000, that does not necessarily mean that is what it's worth, okay? The actual home inspector, the home appraiser that the bank is going to send out there, they may say, well, you know, this house is not worth $400,000. This house is worth $370,000. Okay, that's a huge difference, and we have seen it. We have definitely seen it over the last couple of years where homes are overpriced. So if there is a gap, okay, if there is a gap between what you offered on a legal contract and what an appraiser is saying that the house is worth, y'all, the seller does not, okay, the seller does not have to reduce their price. You will have an option to walk away or pay the difference out of your pocket, or the seller may be very nice and understand the situation and not be greedy, and they may go ahead and say, you know what, we're willing to reduce the price. But all sellers are not like that. You do have the option to walk away during that time, but the bank does not care about what your opinion is about the value of the home. The bank does not care what the seller's opinion. All sellers are going to think that their house is worth a lot more than what it is. So the bank does not care. The bank is only concerned and willing to listen to the hired third-party licensed professional appraiser that they sent out. So yes, you can try to fight it. The sellers could try to fight the appraisal, but y'all, it's very hard. I've tried, believe me, I have tried to fight appraisals, and it's very hard. So they're only going to go with what the house is worth based on the opinion of their third-party contractor. So during this time, say for example, the home inspection report, the appraiser, anything during that period, that 21 days. And again, it doesn't have to be 21 days. I'm just giving you an example. It could be 15 days, it could be 30 days, whatever agreement between you and the seller as far as days. But we're gonna stick with 21 days because that's the common number. During that 21 days, if there is something that you want to negotiate or renegotiate from the original contract agreement, there is a document to amend the contract. So if you need to extend out the 21 days, maybe your 21 days, you're getting a little closer to your 21 days and you don't think you're gonna meet it, there is a document to ask the sellers for a longer period of time, just a few extra days. You have the ability to renegotiate the price of the home, what you offered them. If it comes back that actual appraiser feels that the house is not worth it, there is a document to amend the contract to change that price, and so on. So you do have an ability to renegotiate that contract during those 21 days. Also during these 21 days, we're going to be hiring an attorney. You do need to go ahead and hire an attorney. The attorney is who is going to handle all of the legal documents as far as getting everything over to the courthouse and filed. So if we're moving forward, we definitely have to get on the schedule. There's a lot of buyers out here and a lot of sellers out here, and we have to go ahead and get on the schedule for your closing day. So I would be contacting an attorney on your behalf and scheduling a time and date for your actual closing where you will receive your keys. During this time, the attorney is also going to be asking for several documents. So for example, if you are separated or if you are divorced, we have to go ahead and make sure we have those documents up front. Make sure that if you are divorced, the attorney's office is going to want a copy of your divorce decree or your divorce papers. If you are separated and going towards a divorce, but you are buying a home before you actually are actually divorced, during that separation period, you have to have what is called a free trade agreement, meaning that that particular document is saying that your spouse, even though you're still legally married to this person, they will not have any rights to the new home. And you have to have those things. Because if you go ahead and purchase a home in the state of North Carolina while you are still legally married and you do not have this document, your spouse that you are planning to end things with will have ownership in that property. So after all of this is done, during this period of time, what we are doing is preparing for the closing. If at this time we're at the 21 days or really at around day 19, if you're like, okay, we're gonna move forward, we're not gonna walk away from this contract, this is the house that we want. At this point, you want to go ahead and start thinking about utilities, getting your utilities transferred over or getting your utilities set up so that they are ready. You want to go ahead and contact a moving company, get all of that set up, and plan for your closing. That is it, y'all. That is during the time of the 30 to 45 days that you will have. And I wanted to make sure that I piggybacked off of that last video to explain what is all going on during that time. We are not sitting around twiddling our thumbs during that 30 to 45 days. A lot is going on. I will be doing a lot behind the scenes that I won't even tell you that I'm doing. Your loan officer, the loan officer themselves, everything that's going on at the bank, you most likely won't even know what is going on because you have an underwriter, you have a loan processor, you have things that are going on behind the scenes. People are working on your behalf and you don't even know it. So that is it. I wanted to go ahead and make sure I threw this video in so that you know and have all the knowledge and that you are prepared when you are deciding to purchase a home and move forward with home ownership. So if there's anything in this video that has hit with you, that really helped and really educated you, please make sure you go ahead, give me a like, comment down below, and subscribe to my channel because I will continue bringing in more information on how to prepare to become a homeowner. Thank you so much for watching, and I will see you guys in the next video.